Hey, folks, welcome back and thanks for joining us today. Today, I have a special guest. He's Patrick. He is with us. He's from Colorado Home Realty. And the reason why I'm doing this is you watch my channel, I watch your channel. The reason why I do this is to help give you exposure to, markets, have people discover you. The biggest thing is I need boots on the ground because I don't know how markets are doing. I read a lot of the data that people out there read as well. What's my market going to do? How do I do this? So what I decided to do in 2025 is I'm like, I'm just going to reach out to realtors all over the place. I think you were actually referred to me. I think you were watching, but a borrower that I had pre-approved or something like that told you about, and then we synced up. So if
Right.
you're a realtor out there, we'd love to have you to give you the boots on the ground. But Patrick, thanks for joining us today, buddy.
Yeah, no doubt. Thanks for having me, man.
Yeah, love your channel. You give a lot of details, which is cool. And one of the biggest things that I liked about it was even a conversation that we had behind the scenes was basically you were talking about how your market is very microed, meaning this pocket might be doing really well and this pocket might not be doing well. And that's what I try to keep exposing to people is saying, you have to know what your market's doing, your neighborhood's doing, because
Mhm.
the school district can even determine, what the houses are going to sell or not. So thanks for joining me, buddy, and tell everybody a little bit about yourself.
Yeah, no doubt. Thank you. Really grateful for the opportunity and excited to jam with you and get into some
Sure.
of the things we're going to get into. So Patrick Lorienti, I'm with Colorado Home Realty. I've been an agent, more residential based for going on 10 years. Actually, got into business when I was 19, going on 20. So I'm kind of a young vet, if you will.
Yeah.
Um, and man, have had a really successful career. First 2 years were a grind. Didn't do a whole lot and then just took off from there and just stayed consistent with it. And um, now I just ended up sending my folks an email, my database about 2024, and I've been a top producer in my company for the last 5 years. Ranked 10% of agents in Colorado, and actually finished the third individual in my company. So um,
Awesome.
don't say it to brag, but say it to like I'm
Yeah, that's
actually out
fantastic.
there
Hey,
doing things.
it is what you have to say. It's like on my channel, I tell people the way it is, and some people are saying, "Oh, you're an idiot. The housing market's going to crash and all this stuff." But you have to provide the data. So if you're the
Yeah.
top of your heat, that means you're doing something right. And
Yeah.
some of the biggest things with this in this industry as well is it's personalities. It's what you know in your contacts and everything else, but your personality is what's gonna, kind of I think a lot of times make or break those deals. Okay, I got to ask you this question. What in the hell got you into real estate
Oh,
when you were
yeah.
19? Were you dropped out of school? That's probably number one. Mom and dad kicked you out of the house. Number two, what
Yeah.
what made you go into real estate?
I was quite fortunate early on, knowing that wanted to. It was one of two choices. One was work my way up in a company, and ultimately become a CEO or high up in corporate,
Yeah.
or start my own business. And so, right out of high school, I knocked doors for Comcast for a year. Man, that was quite the experience.
Yeah.
But through that, I knew that I loved relationships. I loved to be able to serve people. I wanted to make more of an impact, and had a family friend in real estate. Talked to him, and real estate kind of subconsciously always called my name. I was the friend that always wanted to go to my friend's house to look at their houses.
Yeah.
And so, I was 19. I was like, I'm done knocking doors. But I figured out what I liked about it, and said, let's try real estate. And there's high impact. I get to be in amazing relationships with people and help them navigate one of the biggest investments of their life. And so, yeah, after meeting with that family friend who was in the business, I jumped in.
That's pretty awesome. Pretty awesome. It's kind of a similar story to mine, but we won't get into it. I got in this. I've been in this business longer than you've been alive. So that's pretty cool. So hey, I do want to post out there that if you have any questions for us, please ask your questions. We'll go over those live. We'll try to go one by one by one. Before we go anywhere, I have Larita. She was a client we helped last year buy a house, and she was so kind. She was on here earlier before we even started posting, and she gave me a nice little kudos behind the scenes. But I wanted to bring up her basically, if we could bring up her question, Pat. The one year ago, I bought my first house and so forth. So that was her comment. So I asked her if she would stay on. So Larita, if you're still here, can you give us a thumbs up so I know you're here or not? And I asked her to stick around. She might be at work. She might be, and this was just out of the blue. She popped in. Let's see if she's still with us. If so, great. If not, we'll just go to any other questions that might be out there. But if you have any questions, please ask those down below. But while we're waiting for her to post, if she's still here, Pat, why don't you queue up one of the first questions I had? And Patrick and I were talking behind the scenes, and if this is kind of how we preempted the show. Is you know you guys, if you watch my show on a daily basis, you get it. I just want you to get the accurate information. Okay, so I was all over the Crash Brothers for the last 2 years, and I just gave up on that. And the reason being is, if you want to watch those channels, God bless you. There's some really good information there, but I was against the crash piece of this. So Larita, she bought her house last year, and I asked if she would stay a little bit with us, just to give us her take. Is she happy that she bought her first house or not? So we'll see if she's still here. But Patrick, let's get over to these while we're waiting, because these are the questions. What I did is I chat GPT all kind of stuff. And between you and I were right before we went live too. I was kind of giving you some secrets on what I do with it. But in today's topic, I wanted to just go over five main questions that a home buyer would want to know, no matter where you live. But in these specifics, like for here, you know, what's the current state of the Denver market right now? What are you seeing? You've been in the market long enough. You're selling homes. You got your thumb on the pulse. Is it
Mhm.
good, bad, ugly? Where do you see it in 2025?
Yeah. Gosh, there's so many different angles I could take this. So many different charts we could look at. I think in general, especially from a home buyer's perspective, really good market for you guys. Relatively speaking, I get the rates tend to be a little bit higher in this market, but for the most part, you're better able to negotiate. You have more options than you have in the past 10 years in terms of inventory. And so, really, aside from the rate, everything else is looking up for buyers. Now, a lot of that can depend on the time of year, which I'm sure
Yeah.
from January until June is typically what I tell my clients. That's selling season. You tend to see more buyers enter the market, meaning it's more competitive. Pricing goes up. It's better for sellers generally from January to June, and it's kind of the sweet spots in the middle of that. Once you kind of get to June, you start to kind of plateau, and then you see the market kind of descend all the way into December, which is buying season. October through December. I'm always reaching out to my folks. It's buying season. But where we are at today, at the end of January, I think that I track data every week, and I'm seeing the market. We're upward trending, right? As we typically are seasonally every time this year, but not as much as I expected. And that's actually good for buyers. Because if we're upward trending in the way I expected it, that's better for sellers. More buyers to the market, more houses going under contract. But it's almost kind of this like slow, stagnant feeling, even though we're uptrending. And whenever I say uptrending in these videos, I'm sure I'll just say it a lot more so for the seller side, meaning the market's picking up, we're starting to see more buyer activity, etc. And we are, don't get me wrong, that's happening, just not to the extent we expected it. And so at this point, we're seeing inventory kind of rise higher than we are seeing houses go under contract. And so that then creates more options for buyers and a better ability to negotiate for buyers. So, in general, if I were to sum it up, I would say it's a balanced market.
Okay. Well, that's good. So
Yeah.
what did your local market do last year? Were you up? Were you down in value? Just generically, like the Denver market, the market you serve, was it up in price? Was it stagnant or was it down?
Yeah, I would say overall up, depending on what data source you're using, whose
Okay.
newsletter you're subscribed to. But relatively speaking, when I'm looking at charts, average price, we're slightly up, maybe 1 to 2% ish. Now, again, the market is super hyper local, and so you have some neighborhoods that could be up 3 to 4%. Some maybe even down 0.5%. But for the most part, it was kind of this flat line, if not, modest 1 to 2% appreciation. Now, that said, if you look at pricing in springtime and were you to have sold then compared to December, you would have potentially sold at 4%, 5% up on pricing year over year. And so, it's hyper local. It depends on the season, but overall, the market was either fairly flatlined or just a little bit up in terms of pricing.
Was there any markets, I guess, even in Colorado, that were down maybe 10 or 15% that you know of?
No, no. If any market was down hyper locally, talking a zip code or a city, it wouldn't have been more than 1%. Um, I could be wrong. Maybe there's some data out there I'm not privy to, but in general, no, there's nothing that I've seen
Okay.
that is showing pricing being anywhere below minus 1%. The market is really healthy overall, generally speaking, in Colorado in terms of price growth in balance.
Gotcha. Okay. That's good to know because, like I said, I don't know the data. I follow the data everybody else follows, and unlike a lot of YouTubers, um, and you're kind of unique too because a lot of people that do YouTube, they're not really active in the business. And when I say that,
Yeah.
is a lot of times YouTubers are just they're 80% YouTubers and 20% in the business. I'm
Mm.
all flip-flopped around and you are too. Most of our business is generated by us closing loans. So there's no reason why we're going to give you misinformation. And again, that's why we do these live. So you can ask specific questions like we have, Pat, if you can queue one up from Millennial Mortgage Guys, there's a question down there. He's asking you, I don't know if that's an area that you know of, but there's a question down there if you could answer that for us.
Yeah. Are there any upcoming developments or construction projects in Arapahoe, Douglas, or Jefferson County? So those areas in specific, you're talking more down south, more west.
Okay.
Yes, there are definitely development in new construction projects down that way. I'm not as familiar, like the back of my hand, familiar with those as I am kind of the northern Denver metro. But there are absolutely new developments coming up in Arapahoe, Douglas, Jefferson, and you'll as you go kind of south Denver metro, you'll see not only new developments from kind of your corporate builders, these master plan communities, but you'll also see more custom home builders in community projects ranging from 5 to 20 home lots. You'll see that much more down south Denver metro than you will north Denver metro. And so but I do know there's what, as we go through this, let me just double check my county, because there's Sterling Ranch, which I think would fall under Douglas. Sterling Ranch has been there for quite some time. I want to say they're probably going on close to 5 to 10 years. And I believe that's in Douglas County. That's a master plan community. So when you get master plan, you get, the rec centers and the pools and
Oh,
all
that's
the
sweet. Got it.
amenity. Yeah. And so master plan's really fun because it's like a city within itself.
That's awesome.
But yeah,
Cool.
there's a ton of development going on.
Pat, cue up the B Markin. This is how we. This is it,
This is
buddy.
my guy.
This
Yep.
is it.
Yep.
So
This is
thanks
him.
so much. And I keep telling you, if you're a realtor out there and you want to do something like this, I'm all in because I need to know what you guys are doing, what your local area is doing. So just like Patrick, Patrick reached out to me. I'm like, let's check out your channel. And I'm like, you know what? You're giving one hell of an effort at this. I'd love to do this with you because I need boots on the ground. And hopefully a lot of your subscribers might need some, at least financing tips or ideas or things like that to go with. So thank you so much for connecting the two of us. We're grateful for you on that one. Let's get to question. Any other questions live here that we have? Nothing yet. So cue up number 2, if you would. So number 2, what are the average home prices in different? What are the average home prices in different neighborhoods? basically you don't have to go to neighborhood, but do you have a nice, and your Denver's big. So, and I used to have an office out there, so I know the area, but are there markets to kind of serve every price range in your local area? Are there starter homes, and then there's the middle, then upper middle, then they go, up accordingly
Yeah, definitely.
all over?
Yeah, I think that's one of the things I love about Denver Metro the most is we do have something for everyone in regards to pricing, whether that's, buying luxury homes in the $4 to $5 million range, all the way to condos in the $200,000 range. Like, there's something for everyone. And the cool thing is that the way Denver is situated on the map, geographically speaking, is those price points are all within a 20 to 30 to 40-minute radius of Denver. So, like, I was just actually I actually just got pizza with B Markin and his family over the weekend.
That's
Being
cool.
that he was from Texas, we were kind of talking about Colorado and different areas. And I was like, man, you like really wherever you're at in Colorado, as long as you're even the greater Denver Metro, where you're just out a little ways from the circle of Denver Metro, you're still within 15 to 20 minutes of about
Wow.
anything you'd ever need to eat, all the grocery you need to get. I mean, so it's really diverse in that way, to where you just have amenities very close to you, and regardless of your price point, there's something for everyone. And so, if I were to kind of lay it out for you, first off, think of Denver Metro as this big circle. You have E470, which is one of our major highways that goes literally in a circle. And anything in that circle or just outside of that circle is Denver Metro. And so, as you go south in that greater Denver metro area, you're gonna get pricing that's closer to 700-800 on average. Meaning that's, you're probably going to be more a million plus in those areas.
Yeah.
And that's down south. And you could almost say from south to north, your pricing is going to decrease. It's not exactly like that. But down south, average price points you're going to see anywhere from seven to $900,000. For that same house, as you come up north, you're going to see that closer to 6 to 800. And so you've got kind of a swing about $100 to $200,000 as you're going from south to north Denver Metro. However, if you look west to east, west, you're going to have the front range. So you're going to have all the mountains. And with mountains comes skiing and different amenities and, yes, money. Those,
And money.
yeah. And so talking about the circle of Denver Metro, you've got I-25 running smack up through the middle. West of I-25, your pricing is going to increase. And I almost literally mean, as soon as you get to the west, there are cities that are going to jump up in price. That 5 minutes east of I-25, you're going to be able to find that same house at a lesser price. So pricing wise, it just as south to north, it kind of goes down, more attainable prices, northern Denver Metro. As you go from west to east, same kind of thing. You have higher price points. Going east, you're going to fall into some attainable price points, where you've got average price point in cities like Brighton or Thornton, or if you go even further east, some parts of Aurora, you could find $500,000 as your average price point. So we really do have something for everyone. And we have it without sacrificing a ton of amenities.
Oh, the amenities out there are nuts. Here's what when I had an office out there. I remember one day I walked to my office and it was snowing that morning. And then on my way home, I think I was sweating and I only had to go like 4 or 5 blocks. It was like 70 or 80 degrees out. And it was just like, this is crazy. And then there's like no bugs. It was like there's no flies or mosquitoes. It's like that's crazy.
Yeah.
So that was really cool. But this is where you could see that you're looking to buy in Denver, and you have to know the market. Like he was saying,
Yeah.
if you go 3 blocks, it's the same thing with Chicago. You could be here and you go across the street literally, and it's like a whole nother. It's dramatically different. So that's what we see a lot of times. See a lot of times there. So okay, Perfect there. So let's see. Anybody have any questions? Please post any questions that you guys have. That's why we're doing this live, so you guys can ask those questions live. I mean, if you do this on after it's recorded, I'll try to go back, and Patrick will try to go back as well
See.
to answer any questions that you guys do have. But if you do have them, load them up. Pat, cue up number 3 if you would. Oh, there we go. Through that one. Housing market is pretty competitive. Do you have any advice or tips for navigating it, especially since they're first-time homebuyers? Yes. What do you do with your first-time homebuyers? Because there's got to be sticker shock. With anybody buying their first house now, you go from renting, and the common thing we see a lot of times is you're going from a 2-bedroom, 1-bath, apartment. You're trying to buy a house. So yeah, the payments are going to be in a lot of cases higher. So Patrick, what's the shock factor you're getting from a lot of especially first-time home buyers? How are they navigating through the scenario?
Yeah, when I hear you say shock factor, I'm like, I haven't had a tremendous amount of shock factor, to be quite frank, is kind of surprising as I'm thinking about it. But I think that's due in part for a couple of things. One, I think that with all that's at our fingertips nowadays, these these buyers, even if they don't get it, they get it. Like they
Yeah.
they have some idea of what it actually is to get into this market, what they're looking at from a rate perspective, monthly payment, not all the time. But you accompany that with rent prices not being that great here. They're high. And so I don't get as much of a shock factor from first
Okay.
time home buyers as even I might expect.
Yeah.
Um, a
That's
lot of
good.
them. Yeah, yeah. And don't get me wrong, there's times where, they look in numbers and they're like, oh, how are people affording this? And I
Yeah.
get it. I mean, it's an expensive world, especially in Denver with pricing having gone up. But so shock factor, there's not a tremendous amount of it. But, in regard to the question, any advice, tips for navigating it, especially first time home buyer, I think it starts with a really, really good team, having a really good lending partner like a Dan Frio, having a high level professional as an agent, because when you're in that situation as a first time home buyer, like I could give you tips that you can take away from this video and like know what questions to ask, etc. But the cool thing about getting a really, really good team is they're gonna help you ask the questions you don't know to ask, and they're going to be able to see things that you might not be able to see in order to put you in the best possible position to succeed. And so what I mean by that is, for instance, I love first time home buyers because first off, education heavy. I love educating. And being able to say, okay, you're here and you want to get to here. How do we build that bridge? And I'm the type of agent that is not going to shy away from a first time home buyer who might not be ready right this second. And so there's a lot of times where I have conversations of, hey, here's where you're at, here's where you want to be. Let's game plan, whether this is 6 to 24 months away. But that's the biggest advice, because we'll be able to kind of guide you and point you in the right direction to set you up for success. But in to further build on this, and I'll come to a point here, is a lot of first time home buyers come into this market and they see the rate and it's like, hey, like you could buy that rate down. Where do you need to be from a monthly payment standpoint? And let's reverse engineer that and show you what the options are so
Right.
that you can figure out what market you need to enter. And then there comes in the local knowledge of being able to say, okay, you're in this price point. Here's the different areas that fit within your price point. And so, again, it just goes back to having a great team as a first time home buyer.
Here's what I get a lot of times is, and I got this, I think, twice over the weekend. Um, the person now goes to their realtor. They're like, I've been pre-approved by Dan Frio. Who's Dan Frio? Oh, some guy I saw on YouTube. And they're like, are you serious? Are you serious? You found the guy on YouTube and now he's your lender. And then usually I'm like, well, can I call them? Because all the realtors out there, and even, you have your team already pre-established to a point.
Yeah.
But sometimes it's like, let me talk to the borrower, because after they talk to me, I think they'll understand I'm on their team. And just because, and don't be wowed over that company that comes in and they're like, I could work with a borrower probably like you. It'd be like you working with, taking somebody out to see 300 homes. And then all of a sudden they come in and say, you know what, I'm just going to use this other person to put the contract in. I make myself available probably like you do, basically 24/7, 24 hours, 7 days a week. And then there is some, there, you need to build the team. Okay. And it isn't always the rate, or in your case, whatever the commissions would be or whatever. That shouldn't be the end all beat all, because the goal here is to help put you in a great position and have a good team. I always say this one thing, and it's not to freak anybody out. It's like, I've been doing this for 37 years now. I'm going to treat, especially a lot of, clients like you and your age and stuff like, I'll talk to you like, kind of not being freaky, talk to you like dad, mom or dad. I'm going to tell
Yeah.
you things you should know, and you can listen as much as you want, but there's no reason in the world I want this to go bad for you. I don't want you to get foreclosed on. I don't want you buying anything more than you have to. I really don't want you going in that house without a home inspection. I got you with this. And that's what we try to strive. And that's why I'm all in for the team thing. I want to work with a team. I don't want somebody just calling in, get pre-approved with me, and then they go to you and you take them to 4 houses, and then they don't like you and go somewhere else. It's like, what didn't you like? Let's figure this out. So I know you understand what I'm getting at. It's,
Yeah.
the clients, you need knowledge, and you need a great team behind you. And that's why I'm reaching out to a lot of realtors right now. And that's why I have Patrick on here. Subscribe to his channel, check it out. He's got a lot of knowledge for you guys out there when you're looking to buy that first house.
Yeah.
So that was awesome. Any
Appreciate
other
it.
questions popping up? Let's see. Millennial Mortgage. Thanks, Nico. Pat, that's Nico.
What's up, Nico?
Denver housing market is pretty competitive. Do you have any advice, tip? Oh, we did that already. Okay.
Yeah, we
So
knocked that one
Pat,
out.
queue up. I think we're on Q4 maybe. And this might be right in the realm that you're talking about. Patrick, you can take this one away. But Patrick and myself, and the reason why he's on here too is we vet people before we have them on there. I don't want pushy salesmen. I don't want somebody selling you to buy that house. I want somebody helping you find your dream home, and then us working together to try to get you in there so you're comfortable. You know what you're getting into. Every question's been answered, and that's our goal here. It's not to talk you into buying that first house. I don't care about that. And like Pat, the thing that keyed me on you, Pat, that you said is, I don't care if it's 6 months or 24 months from now, we'll help work with you. And I do the same thing. I'm not into, if you're not buying in the next 15 days, don't call me back. I'm all in. I want to help you, educate you. So when you are ready, hopefully you choose us. Basically.
Yeah. And I've heard it so many times, right? I got qualified and they said I didn't qualify and that was it. It's like, wait, like, did they explain to you why? Did they walk you through how to get there, etc.? And it's just so important to come alongside these people and be a team, whether it's a first-time home buyer or somebody who's done this time and time again. The one thing I've heard more recently in the past couple of years, when you talk about a 2-to-1 buy down, for those of you who might not know what that is, let's say your interest rate's 7%. Well, for the first year, it's 5%. Second year, it's a 6%. And then year 3 and on, it's 7%. That's a 2-to-1 buy down. I've heard stories where lenders and or realtors are selling their folks on this 2-to-1 buy down, not disclosing, hey, you have to be okay with worst case scenario here. What happens in 3 years if you can't refi? But I'm hearing stories of if you like the first year payment, rates will come down and you can refi. Right. Like, that's where consultation comes in and actually setting people up for success, which,
right. And I have clients, they want it. It's a fantastic, like you said, it's a fantastic program. As long as like I have a client we just talked with today. And you have to, they know that, okay, next year it's going to go to here, next year it's going to go there, and they're comfortable with it because they're going to make more money. They're young people. They're going to make more money. They're just prudent, and they understand what their dynamics are right now. They can afford it as is. But it's that much easier doing like a 2-1 buy down and so forth. I would never suggest it in a market, especially like adjustable rate mortgages are going to come back. Maybe that's something we can talk about here briefly. You've been in the business long enough. You weren't in the business. Well, you kind of got in at the tail end of it when everything just went bad.
Right there, right where
And
the transition period
so
happened.
people need to understand that. But the 2-1 buy down, the only detriment there is here's the good part about it is you get that really low payment for the first year. The payment goes up a little bit the next year, and then it'll go to that payment that it would otherwise be that whole time. As long as you know that. But the biggest key there too is how to structure it into the loan and so forth, because a lot of people don't
Yeah,
understand how it works.
right.
So that's that's that part of it. What else? Here's it. This is a question I wanted to bring up.
Yeah.
What's the property taxes out there?
Yeah, I've heard they're actually relatively low compared to most states. Property taxes out here are, I think a good rule of thumb, 0.8 to 1.2% of purchase
Seriously?
price.
Wow,
Yeah, yeah.
that's
Now,
nuts.
so you've got existing homes in neighborhoods where there's not a metro district. In neighborhoods where there's not a metro district, you're going to fall closer to that kind of 0.8% of purchase price, if not a little bit lower. Let me actually do the math on this. So if I'm thinking of one of my properties, if I was at 0.8%, yeah, about that 0.7 to like 0.9% on existing homes, not in the metro district. So on a $600,000 home, you're maybe 4,800 in property taxes. If you
I'm in Chicago. 600 grand would put you probably at like 10 to 12,000.
see, I hear that and I'm like,
I,
which is
I
a big difference because that's monthly. That goes into your monthly payment for escrows.
yeah.
Um,
That's what's
man,
tough, and that's what a lot of people don't understand. When I pre-qualify somebody, the first thing I do is, okay, here's what I'm using for your numbers. Here's what I'm using. So please be adamant when you're looking at a home. Make sure you understand, like in your case, if they're on that side, they're 0.8 versus a 1.25, big difference.
yeah,
And that's it could be a make or break on that house payment for somebody.
it can. Yeah, no doubt, no doubt. So that's existing homes. New homes. Generally, your new construction neighborhoods are going to have a metro district. Was for those of you listening, just a special taxing district that they essentially create to build and support the infrastructure of a new community. They got to get all this money up front to build the roads and the
Sure.
sewers and the piping, and they wrap that into generally a 30-year payout in the special taxing district. And so those, you're usually 1.1 to 1.4 ish percent. There is a couple of areas that are just absolutely outrageous in taxes for Colorado, and they're still probably a little bit more exciting than Chicago
It's
in terms of
brutal.
the savings.
New Jersey's the number one in real estate tax. I talked to somebody over the weekend, did a
Oh,
prequel,
really?
and we pulled up the taxes, and I was like, "Oh my goodness, it's nuts! It's
Yeah.
nuts."
Yeah. So
So,
Colorado's very, very. That's the one thing where we're quite competitive.
how about insurance? Are you guys getting whacked with the insurance? I mean, I know
We
insurance
are.
is going up everywhere, but I mean, in Florida and California, actually the first thing I tell people or ask people to do, please get an insurance quote,
Yeah.
just on the average home price that you're looking at, because that could make or break it.
It could. Yeah.
Honestly, I
And
had one in Florida, and it was just an average home. I think that the insurance was 10 grand.
wow.
Yeah, so
And that's crazy. I mean, that's a lot of money.
that's
Uh,
insurance, and then you got in Florida is expensive when it comes to taxes too. So you probably have 5, 6, 7,000 in taxes. So
yeah.
you're talking that's a big payment. So the first thing, one big piece of advice is check out that as well.
Yeah.
Um,
Yeah, but insurance is not great here either. Well, I actually did a video on this, I believe, I don't know, maybe 3 months ago, and was reading an article where we're one of the top 10 in insurance premiums.
are you really?
Yeah, over the years, hailstorms, you've had wildfires, and so more so hailstorms than anything has caused insurance premiums to go up.
Cool. Pat, pull up a next, not our queued up question. Pull up somebody's question, if you would, Purdy, please. I don't have my glasses on. Could you read that one?
Nancy. Hi, Nancy. Also, Jeff is typing some comments. What's up, Jeff? B Markin. we'll get to yours in a sec. But yeah, Nancy said, oh, B Mark, and we found that our property tax, yeah, it was half. Nancy, given the Denver climate, sorry, Pat, I'm making you go through all these. Given the Denver climate, are there certain features I should look for in a home, like energy efficiency, snow removal access, or specific heating and cooling systems? I'm in my 60s and recently retired. Gosh, this one's so subjective to like this is where a good team comes in play, right? Because I kind of put on the consulting hat as like, okay, well, Nancy, what's most important for you? How do you want to live? What's the lifestyle like? Do you want a yard to mow or not? Relatively speaking, in terms of energy efficiency, snow removal access, specific heating and cooling elements, first, if you're buying anything that's been built, generally speaking, in the past, gosh, 10 to 15, 20 years, you're probably pretty well set up in all these areas. Colorado's used to the temperatures, the decline of temperatures in the winter. So in terms of heating, cooling, most of your homes are already going to be equipped with what's necessary. Snow removal access. Yeah, this is something that you ought to consider whether you're buying in a neighborhood. Do they have HOA? Are they going to give you snow removal? And B Markin just said south facing driveways for snow melting. Yes, that is one absolutely that you must take into consideration in Colorado.
Really?
Yeah,
It's just little stuff like that that could be like I wouldn't even have thought of it.
Yeah. If your house has a north facing driveway, it is going to be near impossible for it to melt. I just bought a house north facing. I didn't expect it to be that bad. It's if you don't shovel that first day, it's going to be brutal. But as long as you're west facing or south facing, you're going to be pretty good in regard to snow melt and snow removal. And then energy efficiency. Again, most homes that have been built in the last decade or so are pretty well equipped for energy efficiency.
You got a lot of keep going. You got a lot of specific questions down there. Do you buy north face, south face, roof, pipes, foundation, AC, heaters? There's a lot of specific questions. So if there's something there that you can south facing,
Sarah Mason is my
folks. Thanks for asking the questions. Keep them coming. If you got any financing questions, I'm more than happy to help in that area. The millennial mortgage guy, the person that keeps posting, that's actually it's a friend of ours. He's actually an insurance broker. If anybody needs any information on that, just reach out to me. I'd love to connect you with him. His name is Nico.
Cool. Pat, there's one from Sarah Mason. If you could pop that up. That one. So I've got a lot of Sarah Mason said I've got a lot of family members who purchased new homes when interest rates were 2% in Brighton and Thornton. Awesome rate. Even with their property taxes going up $800 a month, their mortgage is probably quite attractive at 2%. But yes, I wanted to bring this up. So you are right, Sarah. The property taxes have gone $800 a month is a bit extreme, but it's not to say it didn't happen. But essentially what happened there and why property taxes rose so quick, so fast is because home prices rose so quick, so fast. And so every 2 years, Colorado's going to reassess property taxes based on the value of the home. And, what happened in 2020 and 2021 is prices rose quite markedly. And so now they're assessing at this much higher price than when these folks bought a house. And for that reason, property taxes did go up. 800 is probably the highest I've seen in regard to property. I mean, that's very high.
That's what I was going to say. That's almost 10 grand. And with the property taxes would have had to double.
So that's 9,600. So they would have had to double. The house is likely upwards of $800,000 plus. But more on an average basis, I was finding my clients, along with myself and other people I was hearing, property taxes going up about $200 to $300 a month. But yeah, that's what happened. And so thanks for posting that, because I think it's important for people to understand what happened with property taxes, why that happened. And you're all right. Over those last couple of years, they did increase because of that. They're in a new build. That's the other thing, Sarah.
Oh. No.
something to consider. So when you buy a new build, I'm starting to see, um, lenders. And Dan, do you do a lot of new builds, Dan? Like, because they have quite
No.
incredible incentives.
Yeah, their incentives are when somebody comes in. I see the loan estimates, and they make you sick because they're like, the rate they're giving these people is just a little bit lower than market rate in many cases, but they're giving them like 15 or $20,000 to buy down the rate to a little bit more. Some are just stupid. Some are crazy. I mean, it's like,
Yeah.
we'll give you a 4.5% rate. Take it.
Yeah.
Some will
I
come
mean,
back with 20, 30, $40,000 in price incentives. And the reason why they're doing it is just to keep that local market prices up. Because if they come back and say, we're going to discount the house 40 grand, you'd have the whole neighborhood up in arms.
yeah.
But yeah, we were doing quite a bit of them in 2021. And the
Yeah.
builders were basically in the catbird seat. And there was one particular borrower who lost the house because the builder was delaying all the paperwork to us, and we couldn't
Mm.
close the day that his contract was due. We could close the next day, and it was due to the builder not sending us the occupancy permit, and they pulled the deal because
Got
they
it.
could sell the house for $150,000 more.
Right.
So,
Right.
but now with all the incentives they give and everything else, it's like, we'll do it for average builders. They're great to work with. But if you're going with a major builder,
They're just
and
hard to compete.
99% of the time, just take their financing and don't even shop it around because
Right. Right.
nobody can beat it.
Indeed. And what likely happened in this case, Sarah Mason, with those taxes, with it being a builder, the times I've seen it, the times I've seen taxes increase that much, it's generally due to the builder's lender or maybe an outside lender who didn't properly estimate the tax rate. And so not only did they get hit with higher assessments, but the lender likely didn't build in their tax escrow enough from the very beginning. And
That was a
so
mess up. That was a complete mess. And well,
that
I
was a
think
mess
it
up.
is with us. If they come back and they say, hey, you only need to hold $200 a month in taxes, I'll say okay to it, but then I'll also call you up and say, be prepared because
Yeah.
next year this thing is going to go skyrocketing. We're trying to get it based on the true tax rate, so you don't have to
Yes.
get in that position. But yeah, that'll happen. I had it happen to me one time, and then since then I've been careful, and that was years ago, where the
Yeah.
borrower called me up and said, "You didn't warn me." Now every time I warn somebody, that's
Yeah.
where my dad thing comes in. It's like, I'm going to tell you more shit than you need to know, but please listen.
Rightly so. Yeah, you got to. That's how you take care of people. And unfortunately, some lenders will miss that. They'll assess the taxes for the property based on the land, and then all of a sudden, when it gets assessed for the house, you get a increase, and then you take into account higher prices. And so, yeah, unfortunately, that happens sometimes. Sorry for your friends getting that great surprise of $800 more a month on their
That's
mortgage.
bad. Hey,
That is
Larita's back. So Larita,
awesome.
we helped this young lady buy a house a year ago. I'm going to put you on the spot if you don't mind. And first off, let's see, how are you happy with the house? If you can answer that question. Sorry, you're going to be on the headlines, but just want to make sure. And here's why I'm asking this question, not to be sarcastic, but you have so many channels just saying, if you buy a house today, you're an idiot. You're going to lose your house. You're going to lose all your equity. You're going to lose this. You're going to lose that. Larita, I guess the question is, I would just ask is, are you happy you bought your first house? You can give us a thumbs up, a thumbs down, a wood, however you want to respond. If you can click back to us fairly quick. Yes. So has your market crashed like the everybody was saying, all the crash brothers were predicting a housing market crash? So it was no crash. Is there anything, Patrick? Is there anything, Jeff? We should be able to
I'm just
get.
responding
Oh,
to text.
got it. Oh, that's awesome. So, Larita, shoot, any questions you want to ask her? She bought a year ago, and she was just thanking me what a great job me and my team did and so forth. And I just asked her to come back because I wanted her to just go through. I wish I could have her on a live event. Larita, I might email you if you're up for doing a live event with me and
That'd be cool.
Me one day. I would love to just because now it's a year past, you can go over, how you thought of my services. I don't even care if you say, hey, if you did this, it would be a little bit better experience, or no, it was perfect. Um, and then go through the process if you're enjoying it now, because again, you have a lot of these videos that come out and say, here's the regrets all these people had. And most of the time when you read those regrets, it's like, well, they should have had regrets because they didn't get an appraisal, they overbid on the house, they got took advantage of from the lender. I mean, everything
Mhm.
went wrong. So those, you can find those all the time. So Larita, there is a delay here, so I apologize. I'll reach out to you personally and just thank you, and then I'd love to do a show with you one of these days. But Patrick, oh wait, what do we got here? Oh,
Oh yeah, one of Jeff's questions.
okay. Do you see any seller finances What is the other thing? Subto
Sub two. Yep.
subject two.
Assume deals out there. Love
Mm,
creative deals as an
I'll go.
investor, realtor.
I don't know if he's asking you or me. I wouldn't deal with seller finances. Subject to
Right.
assumable deals. Assumable deals. Assume deals out there.
Yeah, I would imagine.
Is that
Um,
assumable mortgages?
I would assume so. Either
Okay.
assumable or yeah, you assume the seller's.
Yes. Subject to, we don't do a lot because those are tough to get done right now on our end. We can do, escrow holdbacks if it's a government loan. Those are tough, but assumable deals, we get requests. I work at a company called ServBank. ServBank's the 10th largest mortgage servicer in the entire country. So a lot of phone calls do come through me. Just so you guys know out there, an assumable mortgage. Um, Here's what happens: is Pat, have you come across anybody that's trying to sell their house and buyers are probably looking to assume the mortgages if they could?
Yeah, in fact, B. Markin, my client that
Oh,
connected us, bought with me. We were kind of along that path of looking for an assumable mortgage. Ended up finding a house they love, and it wasn't assumable. But yeah, absolutely, we
the,
see.
the tidbit on that is because we're a huge servicer, you can't assume a conventional loan. So if it's a
Oh,
normal mortgage, can't be assumed. You can assume two types of loans, and they're government sponsored loans. One is VA and one is FHA. I had a team on my staff for about 2 years, and all they did was VA loans. I don't know if they ever did a VA assumable, and they're allowed. But what happens is, let's say you're going to buy a house in Denver, and you guys probably have a lot of VA stuff out in your neck of the
yeah,
woods.
yeah,
You want to take that assumable home, but that house price, like we saw since 2021, whatever, is now 500,000, and those people have a $300,000 loan. Well, to assume it, you have to go back to the lender and have them approve you to assume that loan. You have to meet all those requirements, and then you're still void because you're assuming their mortgage, which is 300,000, but you owe the borrower 500,000. So you have to get a $200,000 somewhere. Well, a lot of times that's hard to get the financing on the back end because you
yeah.
already have to have the house to do a second mortgage. So that gap there is usually the reason why most people, I won't say aren't able to, they can't do it
Yeah,
because they don't have that cushion there. That's
agreed.
normally what happens, but you can only do that with FHA and VA. And I can honestly say I've saw maybe 3 or 4 times in my life doing this over 30 years that it was done. So it,
Yeah.
it is a great thing, but I haven't seen it really come to fruition on my end.
Yeah, I
Working
think
for
a
'em.
lot of people it's definitely not the path of least resistance, and so a lot of people are not, and by people I mean realtors, educating folks about it. Generally, lenders aren't either, and so you don't see it a whole lot, but it's out there.
Yeah.
There's
Oh,
a
it's out there. It's
yeah,
out there.
there's an outfit in Arizona who specializes in this, and he's doing a ton of VA assumable deals actually. Um, it's an incredible opportunity if people have the delta between purchase price and loan amount. But Jeffrey, yeah, we see seller finance sub to assume deals. There's quite a big investor community out here that I see those come across my desk quite often.
And then Larita, thank you so much. He puts in there, yes, I'm definitely say I'm very happy I bought my house. Just thought it would be a little bit difficult, but without your help and sales, I wouldn't be able to do it. And I didn't prompt her to do this. She actually was on the live event before anybody ever went live. I logged in and she already had questions up there. So thanks so much. Pat, I think what's this?
Another
Is this one we
question.
missed? Take it.
Regarding affordability, do you anticipate prices to continue to climb and outpace income affordability? Great question. With this, do you foresee a rate drop in the next year or two to counter higher prices? All right, I'll go first, and then I'm going to let Dan cover the rate. I'll just say I'm not all that optimistic about rates improving a significant amount, but nonetheless, I'll let Dan get to that next. Do I anticipate home prices to continue to climb and outpace income affordability? This is such a hot topic. Well, so price, generally speaking, is a function of supply and demand. Well, we're seeing 10-year high in inventory, so you have more supply than you have in 10 years. But that's being followed with a decently high buyer demand. And so as long as we can keep those two ratios somewhat in good balance, we should see prices at least have stability or modestly improve. Where that could change is either a significant increase in inventory, which may happen. I mean, we're starting to see inventory increase even more this year. We need buyer activity to follow that. And that could be very much a function of rates. And so as rates come down, absolutely prices will continue to climb. But I think there is absolutely a problem with affordability. When you look at home prices and what the monthly payment is relative to income affordability. And, I think that'll be a hot topic over the next couple of years. In general, the Denver marketplace is really, really healthy from an economic standpoint in the diversity in workforce, et cetera. And so I feel cautiously optimistic that prices will continue to climb very modestly, if not at least stay stable. But to be seen in terms of income affordability. We'll see what happens with rates. Dan?
Yeah, on my side on rates, I put out a rate prediction or forecast, and I put out a few of them. Here's the tough thing is the Fed, and this is what I do on my channel every day. So if you're new to this piece of it, you click over to my channel because we go over this every day. There's a huge amount of dynamics taking place right now. My thought is the 10-year Treasury is going to ease off a little bit. The yield spread or the spread between the 10-year and the MBSs, which is mortgage-backed securities, is going to tighten up. And I don't really see a lot of rates coming down dramatically. Like we have Barry Habib, and in the mortgage industry, Barry Habib is he's like the Pope, in the religious piece. But he's calling for rates in the high fives, soon.
Wow.
I don't see where he's getting that. There's a couple of other economists I follow, and they're saying the same thing. And these are guys I really put faith in. I don't know where they're coming up. Here's my thought: is this: you're just going to have some condensed spreads between the 10-year and the MBS because of risk thresholds and so forth. You're going to have the 10-year Treasury ease off just a little bit. Those are my expectations. So I'm seeing rates about 6.5% throughout the 2025 on right about in those range. I'm not predicting them to go into the fives. I'm just saying they're going to be right in the mid sixes, kind of just teetering right in that area. So that's one of those areas. The biggest shock we had was when rates in October of 2023 were all the way up to 8.125. That was basically a 4-decade high. And that was my biggest thing is well, if that doesn't crush the market, what's going to?
Yeah.
You know what I mean? But there's no supply, overall, inventory is up. But if you look at historically, I don't know, in the Denver area, is your inventory exceeding, is it surpassed pre-pandemic numbers yet?
Pre-pandemic.
If you went back to
Let's see.
2018, inventory in let's say the Metro Denver, 2018 versus today, my assumption would be your inventory would be less.
Yeah, I think we are. No, yeah, we have surpassed. Let's see. Some inventory. Yeah, we are surpassing pre-pandemic. Not by a lot.
Okay,
But
but you're back to pre-pandemic levels.
We're back.
Okay,
Yep,
got
we're
it,
back.
got it. And
It's
that
there.
was the biggest thing over the last year or two. You didn't have really prices of things crashing. You had volume. There was just nobody, and that's what saved. This is my expectations. That's what saved the prices of homes because nobody's selling. So if you did want to buy
Exactly.
a house, you had slim pickings, and if that's what you really wanted, then you're going to have to pay for it. And
Yeah.
so that's what we
That
saw.
that saved pricing, or that saved the market from really downtrending in terms of price, because those sellers are sitting. The stats were I think it was like 70% had a rate of 4% and below, and so you didn't have inventory coming to the market because sellers didn't want to sell. They loved their payment. But we're
My,
starting to see a shift in that a little bit. However, one graph we looked at, which was quite interesting, is projected population growth of Colorado relative to the amount of homes sold. And there is a pretty big delta in between how much the population is relative to the transaction amount. And that's our hope. That is the one piece of hope for the Denver market where there's promise, because there's just not enough transactions relative to the population growth. And so that could be some of the pent up buyer demand we're going to need in order to keep the supply and demand ratios where they need to be in order to continue market appreciation in this market.
so your population in Chicago and Denver is still growing.
I think we're kind of at the point where it's we're not growing near at the pace it was. I think
Okay, got it.
we're growing in a way that's on average. It's expected growth. And so yeah, the growth isn't all that much. However, the growth of the past 10 years, and then putting in conservative estimates in regard to how many people are coming. Yeah, we've got quite a big population relative to the amount of homes they're actually buying.
Fantastic. There was an article I was doing, and I'm actually going to do it on my closing video for the day about how millennials are doing really, really, really well in this market, but just don't feel like they're doing well because of the cost of everything.
Mm.
But a lot of them, if they bought a house, they're way up in value there. Some of them do have some money in the markets where the markets are up, quite a bit, but it's your dollar just doesn't go as far as it used to you
It
know
doesn't.
and
Yeah.
that's the toughest thing. So all right, well, Patrick, tell everybody, conclude on I can't thank you enough for being on here. I love this. We're gonna have to schedule another one if we can do this every couple months or so, just to touch base and see how your market's doing and so forth, because I want boots on the ground this year. So if anybody's out there's watching, if you'd like to join me in a show, if you're a realtor out there anywhere in the country, I'd love to have you, just like Patrick. So Patrick, I hope you enjoyed your time here. Love to have you back. And I'm so glad if we got connected with somebody who watches me and watches him, and they connected the two of us, and it was awesome. So thank you so much. But tell everybody, how to get you, where to find you, and go from there.
Yeah, yeah. Thanks for the plug. Thanks for having me, man. This was fun to jam with you. I'd love to do
Yeah.
it. Maybe a
Yeah.
quarterly thing or whatnot. But
Sure.
especially going into what typically is a hot season in real estate, I'd really love to see how that all pans out and come back to you and present the data, because I think we're kind of at this intersection where I actually see a viable narrative that could potentially. I don't think a market crash is anywhere near the
That's what I was
concern.
going to conclude. I was going to say, is there any hints of a crash, and if so, why? But I think you nailed it on the button. You have to have
Yeah.
way too much of something, and
Yeah.
your supply's not getting out of hand. I guess if it's right at pre-pandemic levels.
Yeah, and it's trending up. So that's where I'm like, I really am
Got it.
curious to see how the next 3 to 6 months plays out.
Okay.
Because if we get inventory to rise markedly and we don't see as much buyer activity, that could
Mhm.
equate to one of the
Okay.
first years in a long time where values actually do decrease. If they do, I wouldn't expect they do by much, but that's what we're looking out for. I think there's definitely some promise in the market in general. I think over the next couple of years, we'll probably have a boring kind of flatline market all
It's
in
fine.
all. which is good. We need it.
Yeah.
I think it's actually healthy in that way. So, man, thank you for having me, guys. If
Bet.
you want to get connected with me, they got my channel here on the screen. I
And
do a I do,
we'll put all your information down below in the description as well.
perfect. Yeah, I do a live market update Tuesday and Wednesday, and then just community tours, educational content on Friday. So, would love to connect with you guys. Dan, thank you so much, man. This was
Bet, man.
a great time.
All right, brother. Have a good one. Take care. Talk to you soon.
Cheers.
Take care. Thanks for watching, folks.